Well, Jamie Dimon famously said this year that more cockroaches will emerge in the private credit sector following a pair of bankruptcies. My next guest says even the biggest private credit firms are not immune. I want to bring in Banríon Capital Management founder and CEO Shana Sissel. Yes, how do investors protect themselves from risk in the area of private credit? Because, up until this year, it's been somewhat of a world of shadows. Not anymore, in particular, if you look at what's happened on Wall Street. He's got a good point that there could be a lot more problems underneath the surface.
Yeah, so I have a contrarian view to what a lot of others have been saying. I actually think the biggest problems are going to happen in the firms that are the ones that everybody knows and where the most money has been flowing into to raise assets. Private credit is a very large marketplace now, and a lot of money has flown into these billion-dollar funds that need to put money to work, and they have to be able to do it in $100 million plus deals. And the number of companies looking to borrow that much money that are out there are small, and the banks also compete for that business. So in that market, there's a small number of deals and a lot of money trying to get those deals. I think the way you protect yourself in private credit is to actually start looking at some of the lower middle market where there are not a lot of bank competitors for that business. For smaller businesses, 70% plus of the businesses in the United States are considered small businesses. They have a really hard time accessing credit. And these lower middle market lenders are very niche focused, so they tend to know their markets really well. We have one at Banríon that focuses solely on asset heavy companies, $1.5 million deals in the Pacific Northwest, and they see 25 to 50 deals a month, and they do maybe one. So they can be much more selective. They have a lot more power to command the terms that they want. And those are the places I think there's less risk, because for those companies, something goes wrong, they're out of business. Well, if something bad happens at a larger firm, it's a headline risk, and then a month, 2 months from now, we kind of forget about it and move on. But
you mentioned BlackRock, and I just want to interject really quick. I want to give our viewers kind of a sense of what we're talking about here, and it's something that you point out in your research. You go, the BlackRock fraud story demonstrates that the largest asset managers are not immune from due diligence failures. That is their HPS arm. So I just want to kind of give a face to the story here, besides Blue Owl, which was the real big one. And I think it's interesting that you're really pointing this out, but you're right. Too big of money chasing too few deals, you're going to get problems. And when you got a $500 million investment that goes south, Jamie, that's where Jamie Dimon makes that comment. I do want to move on though with you, Shana, because we got this better than expected CPI and we got the GDP report better than expected, but you're looking at some distortions beneath the surface of the data. What are they?
So we had quite a few distortions, specifically in the CPI number as it relates to the shelter number. We saw no real change in shelter figures in October, which is highly unusual. It's actually one of the areas that is most consistently moving at a very steady and upward pace over time, but we didn't see that in October. The likelihood that there is some warped data due to the government shutdown and what we've received for both CPI and GDP is high. And so my bigger concern is when that gets restated and when those numbers go and change, it's likely that inflation will tick higher and GDP may tick lower. Mm-hmm. So those are just things I'm cautious about right now. The government shutdown really impacts those numbers for the third quarter.
Now, I don't know that we're going to get clear data until the month of February. To your point, revisions to a lot of the reports, and I bet the employment report's going to be top of that list. You've got some stock picks. I want to get to these for our viewers. You like Corning. Why do you like Corning right now? Because you do make the case that the scale and the breadth of the company is what you like about it.
Yeah, so one of the things that I get asked a lot is about AI trade and are we in a bubble with AI stocks? And my response to that is always, it depends. And my response is that because I believe that anybody who is associated with building infrastructure, data centers, fiber optics, anything that can help with building out the infrastructure necessary to support the AI demand is going to do just fine. And Corning falls into that bucket. I think the risks are with the folks that are counting on AI as a monetization tool in order to profit. But the folks who are part of what makes AI work and building out the infrastructure, I think we'll do fine. And Corning, while it's not necessarily associated with AI, the move from copper to fiber optics is one that we should watch as it pertains to the data centers, because that move makes them much less energy intensive. And that is a clear area that we're seeing a lot of focus on right now. How do we build out AI infrastructure without sucking energy from the grid?
You also like Marriott.
Yeah, so consumer discretionary stocks have done quite well, but what we recently have seen, and I can't take total credit for seeing the trend, Strategas kind of picked up on it first, is we're starting to see a lot of strength in anything related to travel. I tend to stick with stocks. I come from the Peter Lynch school of stocks that I know. I happen to be at this very moment in Worcester, Massachusetts, staying at an AC, and that is Bonvoy Marriott Hotel.
Yeah.
And for those reasons, I am familiar with the brand, and the stock looks attractive at these levels, and I think that there's an opportunity to find some momentum in travel stocks.
No,
right now.
Marriott has been on an acquisition boom. It's been incredible to watch that company. We're out of time, but you also like Vertiv, and I wanted to make sure we got that name out to our viewers. Shana, it's always great to see you. Thanks so much for joining me today, and have a great weekend. Hope you had a good Christmas.
Thank you. You too.
All right.